JP Morgan Chase, stock ticker JPM, is currently trading at $128.31 per share. Over the past 6 months, they've seen really good performance, up about 16.5%, but over the past month, down a little over 8%. And you may already know the reason as to why this is: the failure of SVB. And there's also fear that many banks could follow in their footsteps. Now, here's what I think is interesting. I think bigger banks could potentially actually benefit from this scenario. We saw Bank of America receive $15 billion in new deposits in just a matter of days. With a bank the size of JP Morgan, I think the same could also be possible. We see panic-driven deposits provide profitability tailwind. So will they be receiving more deposits because of the fear we're seeing with smaller banks? Now, JP Morgan is a stock that I actually own in my personal dividend portfolio. I'll go ahead and blow this up, and you can see right here, I'm actually up about 18% on my JP Morgan position. So in this video, we're going to be jumping into my bank valuation spreadsheet to see if we can find the intrinsic value of JP Morgan, and we'll be looking at a few different valuations. So let's go ahead and jump over to our stock screener. If you'd like to be able to download this spreadsheet, then you can head over to my Patreon page at the link in the description. But okay, let's go ahead and come up here and plug in the stock ticker for JP Morgan and hit enter, and you can see all of this data will automatically load in. Again, there's a huge run up in the share price, but in the past month, it's dropped quite a bit. If we come over here and look at the dividend data, we can see they're paying out $4 per share with a starting dividend yield of 3.12% and a nice low payout ratio of only around 33%. We come down here, we can see analysts have a target price of $158 per share, institutional ownership around 71%, and then a beta of 1.12. So you will see a little bit of volatility with the stock, but not really anything too crazy. But let's go ahead and look at our first valuation, and I'll go ahead and zoom in here. And this is Benjamin Graham's valuation. It's a valuation model given to us by Benjamin Graham to calculate intrinsic value. And here's the formula he laid out for us. So we need to plug in these variables. We have our earnings per share, we have our growth rate projection, and the current yield on AAA corporate bonds that we need to plug in. And for our growth rate projection, I am staying in line with analyst expectations, projecting a growth rate of about 3.5. And for the current yield on AAA corporate bonds, at the time of this video, it is sitting at 4.42, which is a little bit lower than it's been in the past couple of weeks, but compared to where it's been over the past 5 years, it's still pretty high, which will drive down this valuation. But overall, we still come to an intrinsic value of $133 per share, which is a little bit higher than the current trading price for this company. Now, jumping over to our historical price to tangible book value tab, I think this is a very important way to value a company and especially value banks or financial stocks, because it's going to show you where the company's been at historically and where it's currently at. So what we do is we plug in over the past decade the share price it's traded at. We also plug in the tangible book value per share so we can get our historical price to tangible book value. And this chart is basically showing you where it's been over the past decade. Now, the current price to tangible book value is sitting at 1.78, but if we look at the past 5 years, this is actually the lowest it's been in quite some time. Now, Warren Buffett has stated in past videos that he typically likes to buy bank stocks at a price to tangible book value closer to 1, and obviously JP Morgan is still pretty far from that, but compared to where it's been over the past few years, it looks like it may be a little bit undervalued. Now, jumping over to our multiples valuation, I'll go ahead and zoom in again here. You can see the comparable companies we're looking at, and we're seeing how the market is valuing them using a price to earnings multiple. So we have Bank of America and Wells Fargo. We take their stock price and divide by the earnings per share, and we get their price to earnings multiple. We then take that average price to earnings multiple and multiply it by JP Morgan's earnings per share, and we come to an intrinsic value of $124.35, pretty close to what they're currently trading at. Now, for bank stocks, whenever I provide this multiples valuation, I do also want to look at an ROA analysis. So if I think a company has a slightly higher price to earnings multiple, I want to see if it's justified by looking at this ROA. And you can see in this scenario that's actually true. Wells Fargo has a slightly higher price to earnings multiple, but it could be justified with their higher ROA. Same is true for Bank of America and JP Morgan. So I do think the multiples valuation does provide pretty good credibility with the valuation that it got according to our ROA analysis. Now, the last valuation we are going to look at is the dividend discount model. We plug in the quarterly dividend payouts to see how much the company is paying out each year, and we can see their dividend growth rates. Really good dividend growth here of around 43%. That's pretty phenomenal. 12.5%, a year with no dividend growth, but then 11% dividend growth right here. So that's an average growth rate of around 16.6%. So really good dividend growth over the past few years, even with a year where they didn't grow their dividend. Now, moving forward, I'm projecting a dividend growth rate of 6%, discount rate of 8.5%, which gives us a dividend discount model of $169.60 per share. And again, anytime you have a relatively high dividend growth rate, you do want to check that that payout ratio, and we've already mentioned good payout ratio, only sitting at 33%. So I think everything looks good to go here with our dividend discount model. Typically, I do also like to look at the assets under management. I couldn't find a whole lot of good data for JP Morgan, so I'm not using it in this scenario. But when we jump over to our output tab, we can see grams at 133, multiples at 124, and dividend discount model at 169.6. Now, the current price to tangible book value is around 1.78, which I think for a lot of bank stocks, you could argue it means they're overvalued. But when you compare this company's current price to tangible book value compared to where it's been over the past 5 or so years, I think you could argue that it's trading right in line with where it should be, maybe even a little undervalued. So definitely look into that, see what you think for yourself. But when we apply these 3 intrinsic value models, we come to an intrinsic value of $142.56. Now, the current trading price for this company is around $128.29. So when we apply a 10% margin of safety, you can see it's right at our acceptable buy price of $128.31, meaning now may be a good time to consider adding this to your portfolio. With a 20% margin of safety, we come to an acceptable buy price of around $113.90, which is actually pretty close to the price that I bought into this company. So there you go. There's an analysis on JP Morgan. Go ahead and let me know what you think of this company in the comments down below. If you'd like to be able to download this spreadsheet, then you can head over to my Patreon page at the link in the description. So with that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.